All right, hello and welcome everybody to today's webinar on Fibonacci in the financial markets. This is one of my favorite topics in the field of market analysis, so I'm really excited to share what I've learned with you. This webinar is brought to you by Scandinavian Capital Markets, an industry-leading prime broker based in Stockholm. So without further ado, let's jump right into it. So first of all, let's take a look at a brief overview of the presentation. We're going to talk about the origins of Fibonacci, the man himself. We're going to talk about the Fibonacci number sequence. This is the sequence of numbers that is used to derive the ratios, which are used on the charts for Fibonacci retracements, which you'll probably be familiar with. We're going to talk about the golden ratio, this mysterious number 1.618. We're going to go into Fibonacci retracement levels and how to use them in a trading strategy. Specifically, we'll look at a trend trading strategy using Fibonacci retracements. And then finally, we'll take a look at Fibonacci extensions, sometimes called Fibonacci expansions. And so I've got a quote here from a really interesting book called The 7 Mysteries of Life by someone called Guy Murchie. He says, the Fibonacci sequence turns out to be the key to understanding how nature designs and is a part of the same ubiquitous music of the spheres that builds harmony into atoms, molecules, crystals, shells, suns, and galaxies and makes the universe sing. So as we'll see, the golden ratio appears in all of these things surrounding us in nature, galaxies, and even in the financial markets, as we'll see. So starting out, let's take a look at who was Fibonacci. Leonardo Pisano, he was from Pisa in Italy, or better known as Fibonacci, who was born in Pisa in the year 1170. His father, Guglielmo Bonaccio, so this is where he gets his name Fibonacci, it's son of Bonaccio, Fibonaccio. So his father was a Pisan consul at a Mediterranean port called Bugia, which is now in Algeria, called Begia. And this is kind of the origin of all the interesting mathematics, because the young Leonardo studied in Bugia with an Arab teacher, and he learned the whole Hindu-Arabic numeral system. And during his time there, he even traveled widely to many places, including Egypt, Syria, Greece, where he learned about different numerical systems and calculation methods. He's most famous for his book, the Liber Abaci, which was basically aimed at towards tradesmen and businessmen for practical calculations. This was in 1202 that it was published. But the book ended up popularizing and introducing these Hindu-Arabic numerals throughout Europe. And so the book ended up becoming one of the most influential books on mathematics during the Middle Ages. So moving on, let's talk about the Fibonacci number sequence, which is really at the center of everything that we're going to be looking at today. So in the Liber Abaci, Fibonacci explains this numerical series that has been called Nature's Secret Code. And let's take a look at what this sequence of numbers is. It's actually very simple. In the Fibonacci sequence of numbers, after 0 and 1, each number is the sum of the 2 prior numbers. So the sequence begins as follows: 0, 1, 1, 2, 3, 5, 8. So basically you're taking 2 and 1 is 3, 3 and 2 is 5, 5 and 3 is 8, 8 and 5 is 13, 13 and 8 is 21, and so on, going to infinity. So why is this series of numbers so interesting? The key thing is that in this series of numbers, each number is approximately 1.618 times greater than the preceding number, no matter where you are in the series, whether it's 34 and 55 or 233 and 337 and so forth. That's the ratio. Each number in the series is approximately 1.618 times greater than the preceding number. Now, this is a very special number, as we're about to see. So this number is called phi, or the golden ratio. So this is something that appears frequently in nature, architecture, fine art, biology, and of course, even in the financial markets. So this is something that is used widely in trading throughout the world. So it's not just retail traders that are using this. I started out my career on the floor of the mercantile exchange in the currency futures, and I did a brief stint up at the interbank desk of a major bank. And there's at large banks and hedge funds also. So issue with my audio. Okay, so the ratio can be found in many places in the world. So it can be seen in the ancient world, in the pyramids in Giza, in the Parthenon, in the world of fine art, in Leonardo da Vinci's Mona Lisa, in Michelangelo's creation of Adam on the ceiling of the Sistine Chapel. We see it in nature, in sunflowers, rose petals, mollusk shells, human faces, even hurricanes, spiral galaxies, and DNA molecules. So this is something that recurs over and over again throughout the natural world and in art. A guy called Mario Livio wrote a whole book about phi called The Golden Ratio, and here he touches on just how important this number is. So he says, some of the greatest mathematical minds of all ages, from Pythagoras and Euclid in ancient Greece, through the medieval Italian mathematician Leonardo of Pisa, who we're talking about today, of course, and the Renaissance astronomer Kepler, to present-day scientific figures such as Oxford physicist Roger Penrose, have spent endless hours over this simple ratio and its properties. Biologists, artists, musicians, historians, architects, psychologists, and even mystics have pondered and debated the basis of its ubiquity and appeal. In fact, it's probably fair to say that the golden ratio has inspired thinkers of all disciplines like no other number in the history of mathematics. So that's a pretty bold statement about how important this seemingly random figure of 1.618, how important that number is. So let's get into talking about Fibonacci in the financial markets and Fibonacci retracement levels, which is where they're most commonly found. So most people familiar with trading will be familiar with the 23.6%, 38.2%, and 61.8% Fibonacci levels. But I think fewer are aware of where these numbers come from, because they're not simply numbers in the Fibonacci series of numbers. They're actually derived from mathematical relationships between the numbers in the Fibonacci number sequence. So, for example, the Fibonacci ratio of 61.8 comes from dividing any number in the Fibonacci series by the number that follows it. So, for example, the two numbers in the Fibonacci series of 34 and 55, if you take 34 divided by 55, you get 0.618. So that tells us where we get the 61.8 Fibonacci retracement level from. What about the others? Well, the 38.2 ratio comes from dividing a number in the Fibonacci series by the number 2 places ahead of it. So for example, 34 divided by 89 is 38.2 or 0.382. Then if you look at the 23.6% Fibonacci level, that ratio is found by dividing a number in the Fibonacci series by the number 3 places to the right. So using 34 as an example again, 3 places to the right of 34, we have the figure of 144. You divide 34 by 144, and you get 0.236. We get our 23.6 Fibonacci retracement level. So how do these retracement levels work? Basically, they're simply drawn by using high and low points on a chart, sometimes called the swing high and the swing low. So that's basically the most recent outstanding high to the most recent outstanding low. And these numbers, these ratios of 23.6, 38.2, and 61.8 are drawn out horizontally. And these Fibonacci levels are used as points of support and resistance, and very often they mark to an uncanny degree where price makes a significant reversal. So if we take a look at a chart, in this case we're looking at the pound against the Swiss franc on the daily chart, we can take a look at how these levels are drawn out. So we can see we had a nice downtrend in the pound against the Swiss franc that started back in early May. The pair bottomed out in early August, we can see, and it retraced up to the 23.6% Fibonacci retracement level. You can see above it there's a 38.2, the 50% retracement level, and the 61.8. So in this case, it found resistance at the 23.6% Fibonacci retracement level. It's retraced 23.6% of that move, that swing from the high to the low. Briefly going to touch on the 50% retracement level. That's normally included, as we saw just now, in the grid of Fibonacci levels that is drawn using charting software. So the 50% retracement level is actually not based on a Fibonacci number, but it's widely viewed as an important potential reversal level, and it was recognized in Dow theory and also popularized by W.D. Gann. And I can attest that, yeah, very often it makes a very interesting potential inflection level. So it's a good one to watch, the 50%, but it's not a Fibonacci level. So let's talk about how we can use these Fibonacci retracements as part of a trading strategy. So as I mentioned at the beginning of the presentation, these retracement levels can be used well within a trend trading strategy. So in this case, traders look for a retracement within a trend and use Fibonacci levels to enter in the direction of the initial trend. So in this case, we have the downtrend in the pound against the Swiss franc, and we see the retracement up to the 23.6% retracement level. And as part of a trend following strategy, a trader could have initiated a short position at the 23.6% retracement level with the expectation that the overriding trend may resume, price may fall and even break through the low of that swing move. So basically, the Fibonacci levels are giving you a sort of low risk, high probability place to enter in the direction of the overriding trend. So again, the pair retraced up to the 23.6% retracement level. In this case, it bounced off it, marking a potentially good place to enter the market short with the expectation that the downtrend may resume. Let's talk for a minute about confluence. The probability of a successful trade will increase a lot if you have a confluence of indicators when price reaches a Fibonacci retracement level. So for example, if you observe a reversal candlestick pattern in conjunction with a Fibonacci level or another support or resistance level coinciding with that level, that could be, for example, a major moving average. So let's say there was the 200 period simple moving average coincides with the level. Naturally, that's going to increase the odds of a successful trade entry at your Fibonacci retracement level. basically strengthening the importance of the whatever support and resistance level it is. So we talked about Fibonacci retracements levels. Now let's talk about Fibonacci extensions, sometimes described as Fibonacci expansions. So while Fibonacci retracement levels can mark good entry points to trade in the direction of the broader trend, Fibonacci extensions are often used for calculating profit targets within a trend or within a trend trading strategy. So when you're using extensions, you're looking at levels beyond 100%, such as 161.8% and 261.8%. So again, these are used by traders to project areas that may make good potential exits for their trades in the direction of the trend. So for example, here we've got the same chart with the pound and the Swiss franc on the daily chart, and we've drawn the Fibonacci extensions on there. So in order to do this in MetaTrader, you just basically touch the high, touch the low, drag, and then drag the cursor up to where it retraced to, and then automatically the Fibonacci extension levels will appear. So what you're seeing here is you've got the 61.8 retracement, or extension rather, the 100% extension and the 161% extension. And what it is using is the distance between this initial high to low move and giving you the extension of that. So the 61.8% is 61.8% of that high to low move. The 100% is 100% of that high to low move from the place where it retraced to. So these levels make interesting potential exits if you chose to get short at that level, at that 23% retracement level. It's the same chart. I had to squeeze it up a little bit in order to show you the extension levels. Same chart, pound against the Swiss franc. So looking at the extension levels drawn on the pound against the Swiss franc chart, we saw the potential exits of 61.8, 100%, and 161.8%. So in conclusion, Fibonacci retracement levels are a great tool to pinpoint potential entries and exits within a trend trading strategy. The best results will come after watching how a given asset behaves at Fibonacci levels and using the levels in conjunction with other indicators. So when I talk about watching how the given asset behaves at Fibonacci levels, each security or asset may have its own idiosyncrasies. So one pair may tend to reverse at the 38% level more, and another might be at the 61% level. So it's a question of observation, practice, and also looking for confluence from other indicators to get the highest probability trades. But having said that, they're a great tool for finding these potential entries and exits within a trend trading strategy. So that ties it up for today. I want to thank you very much for joining me. You can reach me with any questions at dan@traderslog.com. And if you have any questions, please feel free to ask them now.